Yo guys, welcome back to Stock Talk Insider. Today I want to talk about Fubo, but before I do it, I really appreciate the support on the last couple of videos this month. I started again this month with uploading a lot of videos. I had to move from another city to this city, and because of that I was able to start again with uploading on YouTube, because I really like to do it from this month. But again, thank you for the support. If you can do it again, please hit the subscribe button if you like the content in the past few weeks. And yeah, I like to continue to do so. And again, also thank you for the support, and maybe leave a like, that's good for the algorithm. And yeah, let's dive right into it. So today we'll talk about Fubo TV. It's a sports streaming that is heating up, and yeah, Fubo TV has just posted its first positive adjusted EBITDA, but at the same time, a mega deal with Disney's Hulu Plus Live TV is under antitrust review. Will Fubo become the clear number two in Live TV, or simply Disney's next trophy asset? So, what is Fubo TV? Fubo is a virtual MVPD, basically a live TV provider online. Their edge is a sports-first focus while also carrying news and entertainment channels. Core market is for North America. They also own Molotov in France and push into international markets like Canada with the Zone. The Disney deal in 1 minute. It was announced on January 6th, 2025. Disney will merge Hulu plus Live TV with Fubo. Disney will control 70% of the combined company, while Fubo CEO David Gandler keeps operational leadership in the company. Regulatory risks. The US DOJ is reviewing antitrust concerns. Timing and approval conditions remain uncertain at this time. Backstory: after Fubo sued Disney/Fox/WBD for their Venue Sports GV and judged blocked Venue, the parties settled. Disney agreed to a $220 million payment plus a $145 million loan, paving the way for this merger to begin. The current financial picture from watching at Q2 2025 for Fubo is that North American revenue was $371 million. Subscribers were at 1.360 million, 1,360,000, and in NA down 6.5% year over year. The ROE was around 349,000 subs, which was around 9 million of revenue. Adjusted EBITDA was plus $20.7 million, the first profitable quarter on this metric. Net loss narrowed to around $8 million. Free cash flow still negative at $37.7 million. Cash balance prelim results show over $285 million in cash and equivalents at Q2 end. The EPS surprise positive, which was around 5 cents versus expected 5 cents. So it was in line, but it was not expected, so it was a surprise positive. Guidance suspended. Management passed full year 2025 guidance due to deal uncertainty, which is always not really a good thing, of course, but again, you take it with a little bit of salt. Takeaway: operational momentum is improving, but subscriber pressure and cash burn remain real, and there's not really, in another way to say it, there's not really a growth in members/subscribers. So if deal doesn't close, focus on ARPU growth, which is the bundling sports advertising pricing. So cost optimization in content and tech. If deal closes, scale and negotiation power with content providers, gross marketing with Disney brands, stronger balance sheet via Disney's financing support. So that's about the strategy going forward and the two possible outcomes. Taking the investment case, so the bull versus bear case, we have bull points. EBITDA breakthrough shows operating leverage, of course. We have Disney synergies, bigger content library, marketing muscle, and better bargain with broader networks. International deals like The Zone from Canada, Molotov France, expand Fubo Sports' first footprint. And also we have a nice cash cushion of $285 million, offers breathing room during transition. A lot of cash is always handy, of course. Taking the bear points, regulatory overhang, DOJ review could delay or kill the merger. Subscriber decline in NA. So the growth engine looks a little bit shaky at this point. Free cash flow is still negative despite EBITDA progress. So that's one to figure out. Insider sales, so a board member sold around 120,000 shares mid-August 2025, may signal limited confidence. And also the legal risks of privacy class action settlement of $3.4 million shows potential for future liabilities. So how should you think about this as an investor? Well, this is not a cash buyout, it's a control merger. Disney ends up with 70%, your stake gets diluted into the new entity. So returns hinge on deal terms / exchange ratio. So yeah, check merger proxy once filed. Also regulatory remedies. Forced divestments could reduce synergies. Post-merger economics, ARPU, churn, and sports rights cost curve. Meanwhile, Fubo stock remains volatile, swinging double digits on every DOJ headline. Some recent stock news highlights, which are also very nice to know and look at. So shares rallied multiple times in 2025 on merger optimism and preliminary Q2 beats. Shares dipped on May news that the DOJ probe was expanding. Losses ranged 3 to 14% in a single day. Strong rebound end of July. Fubo stock skyrocketed after surprising with higher subscribers and better cash flow outlook. Intrinsic value estimates hover around $4 a share, suggesting slight undervaluation versus market pricing, but depends on sustained positive cash flows. Legal settlement, Fubo agreed to pay $3.4 million in privacy class action for users pre-May 2025. Insider activity, of course, is Daniel Lev V, a board member, sold around $435,000 worth of shares mid-August 2025. So is Fubo a good investment or not? So this is a little bit of the takeaway. Upside scenario, deal closes, Disney integration succeeds, scale reduces, content costs, EBITDA remains positive and maybe slight increase, and free cash flow turns positive by 2026. That would be great. Downside scenario, deal blocked, subs continue sliding, cash burn accelerates, dilution or financing needed, and they even start to have problems again with EBITDA margins. Reality, this is a speculative high risk stock, so you have to keep in mind that this is very risky. More of an event driven play than a fundamentals driven growth story. Conservative investors may want to wait until regulatory clarity. Risk-seeking investors might view Fubo as a leveraged bet on sports streaming consolidation. My personal thought is that I cannot give Fubo the full attention to invest in the stock because we still don't know where Fubo will be in the next in the next 1 to 2 years. Will it be completely of Disney? So will it be a company that Disney owns? Or will Fubo still have its own course of working? So yeah, that's a little bit what Fubo and Disney will have to figure out. And what Fubo actually literally has to figure out is, will they stay with 70% and for the rest do their own thing? Or will they completely be bought up by Disney? If so, then Fubo is not a good investment, but if Fubo can stay on its own with just a 70% merger for Disney, then Fubo can be an interesting investment for the coming years. But first, we have to have black and white on paper that Fubo will be its own company for the coming years and even actually decades to be sure of a good investment. If not, this will be wasted money and wasted time, which can be spent better elsewhere. So at this point, I am not invested in Fubo. I did want to make a video about Fubo again because I do think it's an interesting stock and an interesting story at this point, in where the stock would go, and the company is starting to decide their decisions. So yeah, it's a very interesting company and story for me, why I wanted to make the video. But again, coming to the core of this story is that Fubo will be, in my eyes, a pretty good investment, I think, if they can keep growing, but they stay on their own and they don't get bought up by Disney, and Disney just stays with 70% of merger. So I first want that to be cleared out before I can literally say that Fubo is a good investment. At this point, it is a company that I would not invest in because there is no clarity if they will stay on their own or they just get bought up. I can say it as much as I want, but that's the facts of this investment. So Fubo's future hinges on two forces, the unit economics of streaming and the Department of Justice. It could be Disney's next streaming powerhouse or a small player fighting for survival. As always, look past the hype and focus on the fundamentals. And at this point, based on those things, I am not investing in Fubo. I did want to make a video about Fubo because Fubo is a very much talked about stock, and I was just very interested in why that is and why Fubo is that much talked about. So this video proves what I think about, yeah, thanks for watching. Leave a like and subscribe if you liked the video and the other pieces of content that I have, and yeah, I'll see you guys later. Bye.